Good morning, good evening, good afternoon, wherever time it is, wherever you're watching this at. Hello, what's up? All right, so boom. Y'all don't be asking me, but I always do a top down analysis every morning. That's how I be locked in, even if I have a bad day or whatever. This is just, I'm about to show y'all how I do it. It's not magic, it's just a process that I take daily, no matter what. So today I'm going to show you exactly how I do my top-down analysis for NQ every single morning, the same way I do it before we go live trading or before I post it in a Discord. This is what I do. If I'm not trying to, hurry up and pass a fund it. Let's just be real here. Well, top-down analysis just means I start from the bigger picture and I work my way down until where basically I just want to execute. The goal is not to predict the market. The goal is to find where liquidity is sitting, what the higher time frame is implying, what price is likely to react, and what would make me flip my bias. Because if you don't have a plan, NQ will humble you really fast. She don't care about none of y'all feelings. Period. Poo. So now I'm on a daily time frame. This is where I'm checking for the overall story. So I mark up my previous day high, previous day low, any obviously swing highs and swing lows. I look if we are making higher highs, higher lows, or lower lows, lower highs. Then I ask the question, are we expanding? Are we stretched? Are we consolidating? What we doing? And if we're in a range, I already know the market loves to sweep liquidity on both sides before it chooses direction. Okay, first thing first, daily time frame. I mark up the previous day high and the previous day low, always. And because this is market replay, y'all know how it get down. So I'm gonna be marking up this candle. This is Thursday because we're trading on Friday. This is a Friday trade, so I'm marking up Thursday daily candle for the previous high and previous day low. So I use my horizontal ray. Go to the bottom of that. Y'all notice I used the orange color. And let me zoom in a bit. Okay. I go to the top with the same horizontal ray and I mark up previous day high, PDH. I then look for fair value gaps, me personally. So I just zoom out a little bit, see what I can see. And obviously I spot a fair value gap here. And if you can't spot it as fast, you can also use those indicators that we talked about previously. And I type in daily fair value gap. And I will make that purple. You can also throw the indicator on to see where your fair value gaps and boom, 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 lines up perfectly. Now, lately, because there's been a lot of gaps everywhere, I would just make sure I have this visible on current interval only. That's how I like to do it because I have multiple monitors up so I can see it. So I just do that and then I make my lines visible on all intervals so I can see it on all time frames. All right, that's what I'm looking for in the morning. So I look up for previous day high. I mark up the previous day high, the previous day low. I pay attention to the swing highs and swing lows. And I'm asking myself, are we expanding? Are we consolidating? What we doing? If we're in a range like we was this past couple of days. So daily is my big bias, not my entry. Just the big bias, like the overall entry. Dropping down to the 4 hour time frame. And now I drop down on the 4 hour time frame, and this is where things get a little juicy, juicy. I eat that lunch. Okay. The 4 hour helps me see the real structure a lot cleaner. So I like to see where we broke structure, the BOS, where we displace, and where price is pulling back into. So this is where that parallel channel, the CLM, come in at. I'm always tracking that channel flow. Are we stretched to that premium side or are we sending discount ready to go higher? Okay, because I know from the daily time frame prices and premium, I'm looking for shorts. So, and we are also near this previous day high right here. So I want price to, take it out a little something, and then come back down to shorts. I'm looking for shorts just because we're up here. Um, I see some fair value gaps, but obviously I see some bullish fair value gaps. But in my opinion, I don't want to see this hold. You get what I'm saying? So I personally wouldn't mark it. You can mark it just to have it, but I don't like my chart cluttered. It irritates me. It does something to my eyes. It made me twitch. It made me itch. I can't have it. So I don't mark it. I'm not looking for longs. I want short. So if I don't see no fair value gap up top, cool. I just see this previous day high, this 4 hour candle right here. So now we dropping down to the hour candle. Well, the hour time frame. In the hour time frame, and y'all know I like to mark up my session highs, my session lows. Um, I like to look for fair value gaps as well. I look for fair value gaps on all time frames. Um, but most importantly is this session highs and lows in the hourly time frame every day, no matter what. And that is where liquidity is obvious when you mark up your session highs and lows. So we got our session highs and lows marked up, our opening support and resistance lines, we got all that marked up. My thought process is if price sweeps Asia high, then I want to see displacement, 5 minute time frame, 1 minute time frame, 15-second time frame. I look for shorts. The target would be the London lows and the previous day low we had marked up. And vice versa. If price sweep out the London low first, I will wait for displacement before I long because we have liquidity sitting at the bottom. Just come with patience. I'm real patient on my live account, on my funding account, not too much. If I'm trying to pass it, I'm just trying to, I'm being very honest here. But y'all should know on my live account, I am very strategic and very picky about the trades I enter on my live account. Once I wait for liquidity to sweep in either direction, I go down to the smaller time frames for my entry. 15-minute time frame, a 5 minute time frame, a 1 minute time frame, and a 15-second time frame for me. So I'm basically looking for a sweep of the highs or a sweep of the lows, which is basically a liquidity grab. Displacement before I enter the trade, a break of structure, a fair value gap, and then an entry on a retrace into that fair value gap for a clear position. I'm not entering because price is at a level. I'm entering because price gives me a reaction plus the confirmation. That's the difference between getting wicked out and actually catching the move. So I would do a little example here. This is the hour time frame. Obviously, it's gonna be hard to catch it, so I would just try to play real slow. Okay, I paused it. Oh, I caught it. I caught it. Okay, so we see price just took out the Asian highs, the London high, and it got close to this previous day high, correct? I want to look for shorts. So I would go down to the 5 minute time frame. So we already saw that it took out the session highs and it got close to this previous day high. We have our 5 minute pullback and our 5 minute retrace right here. I look in the 1 minute time frame right here and I look for my fair value gaps. Mind you, in real time, you got to do this real fast with NQ. I like the reaction it just did right there. I will enter shorts. My stop loss would be the recent high just to protect my capital. And my TP would be the session lows. But I really want to aim for this previous day low. So you got several TPs you can take. Every line that you create is literally a resistance point if you look at it that way. And if you back test this, you will understand why I call it a resistance point. that's my top down analysis every morning. The daily time frame, the 4 hour time frame, the 1 hour time frame. I mark my sessions, highs, lows. When I see a liquidity grab, I go down to my execution time frames. And if you follow this process, you will stop feeling lost. You'll stop chasing trades. You know, sometimes I be chasing, but I just be trying to pass these combines real fast. It's a waiting game. Trading is a waiting game. That's pretty much it for this video, guys. And I will see y'all next time.